Today we had some beautiful price action and we traded the 4-hour po3. The execution marks are not on because I upgraded my Lucid Combines to funded, and we will be trading those next week. I will not be trading Friday. I don't even want to try, to be honest. I want to be done for the week because we had a great trading week. And if I was unfunded, I would definitely try to aim for a winning day or just like completely sit out. So going to the charts, let's start on the 15 minute. And you notice we have so many crack correlations. Beautiful, beautiful setup. So starting on the hour so we can see the weekly clearly. We have this weekly cycle with ES. Very significant, low of week, got swept, and it actually got reswept right here during our 9:30 open, which was another confirmation too long. But you had to be patient. We had to wait for the right time, and that time was our 10 a.m. candle right here, this 4-hour PO3 that is expanding up to all-time highs. So with this weekly cycle, what I was looking for off of that was just some kind of 15-minute, and we actually got a 1-hour higher time frame market structure shift, which I saw as this BPR and this 90-minute BPR right here. I did not think we would move lower than that, so I made it yellow as its significance is high, and that's what I do for like a 10 a.m. open, 10:30 open. I just color yellow. Same with 4-hour for value gaps that are high time frame point of interest for reversals. And if we look on, let's look at YM on the 5-minute because we had true day open mitigation at the time. Let's look at pre-market. So pre-market 8:39, 8:30 to 9. Right here, we had a 90-minute manipulation. We had true day open manipulated. We had true New York mitigated. So all mitigations, and just like looking at the replay, all mitigations were perfect. Like I didn't expect it to resweep this at all, but YM tends to do that. So I was just waiting for something like that to possibly happen, and it did. And during this retrace right here, this 9 to 10 a.m., 9:30 to 10 a.m. is when we were creating our discount to long. And I saw this, you can see right here, this 15-minute swing divergence with ES that I'll just mark out right here as SD. This 15-minute swing divergence was our low to enter off of. And so that would be where we would look for our reversals. And if you want to use an OTE of the range, that we didn't really tap into it. I mean, CE, yes, but like no discount needed to be taken because we had all this mitigated. I mean, there is a minor discount right here that you can use at CE of the range, but really I was looking at PO3 for my entry time, and I was looking at the cycles for the right time to enter for distribution. So when I literally wrote down in my journal, we have weekly cycle, we have a bullish daily cycle, we have a bullish 90-minute cycle, we have true New York mitigated, we have true day open mitigated. We are like literally at the lows of the week, and our expansion is going to be in the opposing direction because it's a large expansion and we have so many crack correlations. So coming into the market, I was just waiting for a 30-minute PO3 to see if it was going to move us lower. And I knew it was going to move lower, but I didn't know where it would start to reverse. So this trade, I just didn't take it because it was in manipulation quarter. I knew that this was accumulation. By open, we manipulated this high and we created that crack correlation with ES right. Where is open? Yeah, it was this SMT right here. So this SMT was a valid short. The target wasn't as clear because, like I said, true New York was mitigated. True day open was mitigated. I don't really want to be targeting something like this. The body of the PO3 did reverse here. So, I mean, if you wanted to take a reversal and have a stop somewhere here, you would be targeting, like, I don't know. I mean, that's minor sell side, kind of like, I don't really know what you'd be targeting because this is manipulation in our distribution, and like literally microcycle distribution is coming up. So like, why would you trade short? Even though it is a large move, yes, you would be exiting based on like a profit target, basically, an RR, like strict RR. And I don't want to do that. I want to be in the best time for the market to move because that's usually where you get the bottom of the day and the bottom of the 4-hour. And that's the trade that if we were to hold for our 4-hour, then we would be up 330 points, which is nuts. That's 10% on a day. That is like that's crazy. That's crazy. And this is all possible with this model because we're just aligning the cycles, and this just happened to be the entry for the model. And if it's low stop, that's just what it is, and that's what the model tells you. So the blueprint is, well, it was so clear today. Starting on, let's just go to ES. I mean, okay, let me mark out this. We have the obvious swing divergence, and right here we also have the SMT, which is a microcycle. This microcycle is very important. So going only to NQ, we have our narrative. We're bullish. We had all mitigation for all the time frames and opens that we were looking for. So now I'm looking at 15-minute, or technically I'm looking at the 1 hour, 15, 5, 1. So 1 hour, this is, okay, 1 hour, 9 o'clock candle, 10 a.m. opening. I wasn't paying too much attention to this. I was just looking at the structure of 1 hour being balanced already, and we're trading in this order block. So like things that you can do to grade this would be just like grading the quadrants. Where's CE? Okay, it barely tapped CE. And then 10 a.m. didn't even tap 75%. Like that's the way of grading it if you don't have, like gaps to show you where it would be moving. But the reason why this is important, let's just stop messing around with the time frames and go to the 1 minute. This microcycle was so clear. So a manipulation in this quarter, this is our low. This is like our lowest low in manipulation, turning over right here. This candle is lower. So this is our low in manipulation. Our low in distribution is right here. So this being said, this is probably the best criteria for a low risk long that'll yield you like the entire 4 hour candle. Because we had this 2 minute right here, getting tapped was all we needed to get filled. 2 minute tap. And the reason why I don't use the 1 minute is because there just was no gap, right? Sometimes the 2 minute is just much more obvious, because if you're looking on the 1 minute, you might, get a later entry. And honestly, in the 15 second, I was looking to enter because we had this tap. I will be completely honest. This loss right here was it was 4 cons. It was very slight. And I was just seeing if this 3 candle pattern would like just make us reverse. And it didn't. So that was my initial trade to pass the account, and it got stopped out. I mean, look at the RR. I just took it because I wanted to see if it would work. If not, then I would take the same trade anyway if it proved with this 2 minute that I knew it was going to do. So I took the trade anyway. Either way, I knew it was going to be a great setup, even if I did wait. But let's look at this right here. This 2 minute, very important. When we tap this, look at how the bodies respect this. The 2 minute is holding. If I'm in here, I want to know where my entry was exactly right here. So that's the opposite position. My entry was right here. And I want to know where to trail my stop to, because 10 a.m. is coming open, and oftentimes 10 a.m. will manipulate into the 30-minute po3 range. And so this is our 30-minute range. If we're just grading the quadrants, when 10 a.m. opens, we come down, sweep. I want my stop not to be break even, because even in this range, OTE, it's not safe. It's not safe right here, right? That's like if I entered here, that would be a little bit below CE. And if you would have put it up a little bit higher, then you would have gotten stopped out. So what I did was I trailed my stop to this low, because on the 30-second, that is where we get our fair value gap right here. That doesn't get tapped into. It's tapped on the 15-second, sorry. And that's where I want to be, because that's where our swing divergence low is, on the 15-minute right there, the swing divergence low. So I kept my stop, not fully stopped, but I trailed because of the time it was, and because I wanted to take risk off, because I don't think it would come all the way down if it was going to be the trade that I knew was going to play out. So I marked out our 10 a.m. I'm waiting for this to be used as basically a liquidity sweep and inversion for value gap. I mean, that's how I use the 10 a.m. candle. We look for a sweep, and then we're looking for the body. And if let's just pull up the 4 hour po3, because this is when the body actually reverses. Like this is where the candle is right there. That's when our 10 a.m. candle reverses. So this was our wick. And that's how I use 10 a.m. I mean, that is how the 4-hour po3 should be used, right? Let's just move these quadrants. We don't need to use these. That is how it should be used, because even if you take a reentry, if you missed or if you're waiting for 10 a.m. to open, this would be your long position. After this right here inversed, even if you waited for this to come all the way down, this would be your long. Up to first target, second target, and then holding for runners. There is ways to lower this, especially if, like, you definitely saw this earlier after this reversal, because this is the reversal point. I entered here, and then valid entries are literally anywhere. Looking on the 2-minute, it would be clearer to see a valid entry. Like looking at 2-minute candles, when we start to make this bullish candle, I would put stops here because that is a low risk stop. This is our low candle before our reversal, so that would be a good stop. Anywhere like before trying to get in the wick is what we usually try to aim for. But I honestly wouldn't put a stop at the wick just yet until we inversed that 10 a.m. Just because wicks are devious and they will stop you out. That's how the market's intended. The wicks do the damage and then the bodies tell the story, as ICT says. So this was a incredible trade. It was really all cycles aligned, and that's what I preach. When all cycles align, you want to be holding this trade for longer because it will yield such a high return, and it's just waiting for the Kraken correlations, True New York, True Day Open, all these things. You wait for time and price to align, and the trade is literally gifted to you. It's so easy to see. It's almost like, how do you miss it? Because it's right in front of you and you've seen it so much. So that was our trade for today. It was really clean. I enjoyed trading today. Like I genuinely enjoyed watching this price action print because it was very relaxing. Like I knew what was going to happen. Even ES looked clean. We had this SMT, which was holding very strongly. So after this first break, this market structure shift, and we didn't even tap into this fair value gap, but you know, ES is kind of strange price action, as we know. So after that, I knew this also was our new daily opening gap that was open. We didn't create one. If you just, let's just look at the regular trading hours because we do it so often. Regular trading hours, there is no gap until, so ES has the gap. ES's gap is right here. I was expecting this also to get filled. That's just another confluence. True microcycle opened. We had our sweep high at open, and then we dumped lower. True microcycle will be traded back into, like, if we have a reversal, these highs will be taken. That's just low resistance liquidity, and higher is just what is expected of the trend. So where's open? Yeah, so open swept, and like I said, no regular trading hours, no gap at all right there, not whatsoever. So this was generated liquidity to be taken after this reversal, and higher targets is just regular trading hours, all-time high, which I did put just because, you know, sometimes, you know, we just do strange things in the market. So reversing at this point, or like where we are right now, 0.705 probably of the OTE, or something close to that for the week. Yeah, around OTE. So like stuff like that is just where price is going to reverse on the higher time frame, but still continue trend most likely. Just, you know, always got to be prepared for these 15-minute retraces, 5-minute retraces, even 90-minute, like our 90-minute candle wicked all the way down here. And let's look at 10 a.m. because if you weren't in when you're supposed to be, which was obvious, then 10 a.m., let's see if we can get a good entry after 10 a.m. because after this news candle, it was, I didn't really see anything else to enter in on, and that was off the chart, so I didn't really care either way. It's interesting that I'm looking at this. So I mentioned before, the best way to exit on a 4-hour PO3 is with a 5-minute CISD. So let's say we get a 5-minute CISD and reading the 90-minute quadrants. So our 90 minutes, what is our 90-minute looking like? Our 90-minute is AM distribution higher, and if it's going to expand even higher from there, it'll be that. But if you get a 5-minute CISD, something like this is getting broken under, then I would be exiting, because we are looking for 2, 3, usually 2 to 3, but now we have 5 candles of what would be the opposing color. So we're looking for 3 or 2 bullish candles to be closed under on the 5-minute chart. We don't want to do it on the 1-minute chart. We care about the 5-minute bodies closing. But once that closes under here, then I would be exiting. But it looks like distribution and expansion are going to be one. So how to manage your exit is so important, very important, because like I said, this exit was not really that valid because True New York was already mitigated. True Day Open mitigated. Like, what are you going to target? There is no low that we need to hit. We just need to go to discount before moving up higher for our 10 a.m. PO3. Like 30-minute PO3, the movement's good, but it's not the best and it's not the right time for distribution to take place, which is the easiest to trade. Not only is it the most movement, but it's the easiest to trade because it's the most movement in the shortest amount of time. So now we are finished. And let's get off the charts because we don't need to be on there any longer than we should.